Okay. Okay, cool. So like I was saying, guys, this is going to be a 4-week boot camp. Last week, we went through some fundamentals, like just what is Forex? When we are trading, when we're getting into the markets, what exactly are we doing, right? We went through different trading sessions, what times to trade, best things to trade during certain sessions. We spent a lot of time on trading psychology, which is probably, not even probably, which is the most important aspect of your trading journey. Okay. I don't care if you have the best strategy in the world, if you do not have a good trading psychology and a good mindset, then all of that work will be undone. Okay. We went through some goal setting and we also went through, things like what is a pip? What is a lot size? Just some fundamentals. So today we're going to be building on that and we're going to be going through taking the trade ideas effectively. When I say trade ideas, I especially mean the signals that we are getting in the PV Insights group. Because the reality is, as a beginner, you're not coming in here in your first month and finding your own setups. Okay, you can if you really plug in and you study, but most people, 99, I would say 0.9%, you're utilizing the signals as a beginner to make yourself some profit while you are learning. Okay, so we're going to go through on how to be taking those effectively, whether it's a live session or whether it's the PV Insights. Now, a big part of this is going to include risk management. Okay, we started touching on that list last week, but we're going to go in a lot more depth this week, and particularly how to use a risk calculator. Okay, which is also super, super important. We're going to go through the difference between a market execution and a pending order, because as a new trader, you're probably not going to have a Scooby what that is. I know I definitely didn't. And we're then going to go through how to use MetaTrader 5 in depth. Okay, so how to take the trade, whether it's a market execution or pending order, how to set your stop loss, take profit, how to move your stop loss to break even, all of those kind of things. So let's dive straight in. Okay, first things first, I would highly suggest taking notes. Okay, if you are on this session and you may be paying attention and listening to everything I say, but if you're not taking down notes, I guarantee you're only going to retain about 5%. You're going to come to this tomorrow and be like, oh, what did she say about moving stop loss to entry? How do I do that? What does that mean? So if you don't take notes, you are going to forget a lot of it. Okay, so first things first, when it comes to taking the trades from the PV Insights group, I'm going to go through just a little checklist of what you should do when you see a signal. Okay, so first things first, you need to check the current price. So if we were sent a gold trade, for example, and we were told to buy gold and whatever the entry price is, the first thing we have to do is check, is the trade still valid? Meaning, is it still within the entry zone? Okay, especially, okay, with gold. It can move very far, very fast. So if you're jumping into trades late because you haven't actually checked if the trade is still valid, everybody else could hit TP1, TP2, make money. But if it reverses, you might be in a position where you lose money, right? And we definitely don't want to be in that position. So if price is not within the entry zone, I'm going to go through examples too, don't worry. But if price is not within the entry zone and it's already moved into profit, leave it. There will be another trade. Don't touch it. Okay. And again, I'm going to show you how to look at this on the chart. Everything I do here, I will then show you how to do on MetaTrader 5. Okay. So that's the first thing. You're going to check price. The second thing you're going to do, if we're in the entry zone, you can go ahead and execute the trade. Okay, so if it was a market execution, whether it's a buy or a sell, if it's in the entry zone, you can go ahead and you can execute the trade. Okay, now you can also, and I'm going to show you as well how to do this, set up the pending order if that's what the trade idea specifies. So we're going to get some trades, not as many, but we're going to get some trades that will tell us it's a buy limit, for example, or a sell limit. Okay, that means it's a pending order. The trade isn't ready yet, so we're gonna set it up ahead of time. Now, ready to execute the trade. This is, I've put potential trading plan because at the end of the day, you can take as many entries as you want. You can take, one, you can take five. It's going to be based on your trading plan, but this is what I have found to be most effective, especially if you have a smaller account. Okay. And when I say smaller account, I mean like $1,000 or less. This is what I found to be most effective. Okay. So what I do with my trading plan is anytime I get a signal, I take 3 entries. The reason why I do that is because the majority of the trade ideas we get, especially when they're gold, give us 5 take profits. But if you have a small account and the stop loss is, for example, 70 pips, if you take all 5 entries for all 5 take profits, okay, you've basically just opened what's 7 times 5? 350 pips. Okay, so if that goes in the wrong direction, it hits stop loss, you're going to lose 350 pips, which is $35. Well, if you only have a $100 account or a $200 account, you've just taken a massive chunk, right, out of your account. Okay, so this is why I take 3 entries if I'm trading on my smaller accounts. My first entry, I'm going to set TP1, and the stop loss, of course, on all entries remain the same. The second entry, I'm going to set at TP2. And the third entry, I'm going to set at TP5. Again, reason why I do this, and you might have been taught something different by your mentor, and that's totally fine. The reason why I do this is because TP1 and TP2, more often than not, if it's a winning trade, they both get hit, especially with gold. TP1 is 30 pips, TP2 is 60 pips. It is very easy for gold to move that way in a very short space of time. Okay, so you've got, TP1, TP2 hopefully get hit. Then what I do with my one that's set at TP5, I just start moving my stop loss up behind me, reducing my risk, securing profit, okay, so that I can hold the trade as long as possible. If you can get in the habit of being patient and holding your trades as long as possible, you're going to increase your risk to reward. Okay, and I'm just going to give an example actually. I don't know if Brandon's on the call, but Brandon in my team, he just took a trade. Let me go to his results. Okay, he's gotten very good at being patient. Okay, he only took, where was it? A 0.01. For those of you who were on last week, a 0.01, how much would Brandon be risking per pip? Somebody tell me in the chat box. How much is he risking per pip? 10 cents. Perfect. So that's the lowest possible lot size. And a common misconception with a lot of people is, of course, if you're taking the lowest possible lot size, you're not going to make all that much money. Okay, let me tell you what Brandon did. I'm trying to get it up. Oh, there it is. Okay, and you're probably not going to be able to see it because I've got my background blurred. Let me unblur my background so you guys don't think I'm like, fibbing. And I unblur it. There we go. Can you guys see that? Can you see how much Brandon had made? $286 on a 0.01. That means he was patient enough to hold that trade for over 2,000 pips. Crazy, right? Now, with gold these days, I mean, that's what's possible. You could have $100 in your account, take a 0.01 and make $286 in one trade. That's crazy. Okay, but this is also why I've been teaching my team, setting one of your entries at TP5, but they keep moving it. Keep trailing your stop loss behind and keep moving your take profit up so that you can catch as many pips as possible, because those kind of trades, like honestly, these are like daily occurrences now with how gold is moving. Okay. And again, don't worry, I'm going to show you how to do that. If you don't know what I mean when I say trail my stop loss, I'm going to show you. Okay. Now, the key part with this, okay, you can choose to copy my model and take 3 trades. You can take all 5, if really, if you want to, and set one at TP3, TP4. It's totally up to you. But whatever you decide based on your trading plan, however many entries you decide to take, just keep it consistent. Because what's going to make you not consistent in your results, and this is part of your psychology, is if you take one trade with 3 entries, and maybe that's a losing trade. So you decide, okay, the next trade, I want to make that back. So I'm going to take 5 entries this time. Or the next one, I'm a bit scared. So I'm only going to take 1 entry. That's where you're going to start to get inconsistent results. Whatever you decide to do, just do the same thing over and over and over again. Okay, so that's step 2. That was a really long step 2, but I just wanted you to understand why I'm suggesting this and the power of holding trades. Okay, now step 3. Now that you've taken your trade, you need to manage them. If you are going to be trading gold and you're going to take multiple take profits, don't just like put your phone on airplane mode and disappear. Or, if you have a busy job and you're about to take a trade, but in 5 minutes you can't touch your phone, like I would just personally stay out of the trade if it's gold. If the Forex trades, for example, where they move a bit slower, yeah, cool. So you can set those and forget those. But with golds, especially, you want to be able to manage the trade. Now, my suggestion, again, you can choose to take this or leave it. But once a trade hits TP1, in my eyes, that's a winning trade. So if a trade's hit TP1, you've secured profit on that. One of your entries has closed. You now, again, I don't say now, but you should, in my opinion, now move your stop loss to entry on your remaining trades. The reason why you want to do this, if you hit TP1 and now the trade turns around and reverses and takes you out at stop loss for your 2 entries, well, you're now in a loss, even though it's hit TP1. Okay, so I'm going to show you guys how to do this. But what this basically means is you're going to break even on those trades. You go risk-free. So you'll have secured TP1, and then your other remaining entries are now risk-free. Now you can kind of go about your day and not really stress about them. When TP2 then hits, this is where you can potentially start trailing your stop loss. And again, I'm going to show you how to do that. Okay, is this making sense so far? Drop a 2 if this is making sense so far. Amazing. Guys, as we go along, if you have any questions, please feel free to ask. I will 100% answer. Okay, so this is steps to taking our trade. Now I'm going to go through and I'm going to show you a couple of our signals as examples, okay, after we discuss this part. Okay, so market execution versus pending order. If you're new to trading, the good news is there's only these 2 types of trades. It's either a market execution where you are entering the market immediately. Okay, so that means when you see a signal, if it tells you buy gold and it gives you a price, chances are it's probably in that price. Okay, for the most part, our trades are market execution. You might need to wait a second till it comes into the zone, but for the most part, it's going to be market execution. A pending order is where we need to wait. Okay, we're not quite ready. The market hasn't come to us yet, or a particular point of interest that one of our traders have identified. So we'll then set up a pending order. Okay, now there's 2 different, I suppose, categories. You've got limit orders and stop orders. You will see, I think it's Jeff, or not Jeff. Yeah. Donnie as well, I know sometimes sends limit orders too for his Forex trades. Okay, so you've got buy limit, sell stop, buy stop, sell stop. Now I'm going to stop sharing this screen and I'm going to share my whiteboard so that, hold on, let me blur my background. I'm going to share my whiteboard so that I can show exactly what these mean. Because this was something that took, when I was a beginner, it took me a while to just get my brain around this. And if that's you right now, then you know you're not alone. Okay. So, first things first, limit orders. And again, if you're a note-taking person, this is definitely, I'd still be taking some notes. Okay, so limit orders. Bear with me here. If you get sent a limit order, price is moving in the opposite direction of your trade. Now, bear with me because that probably sounds super confusing, but I'm going to draw it out. Okay, so let's say we had a buy limit. Okay, BL stands for buy limit. And we were told, let's say our buy limit was, let me type it out. Our buy limit was for golds. Guys, if you could avoid drawing on the screen, that would be great. Because if I have to stop sharing this because someone is being immature, that would be super annoying. If you're on a phone, just don't touch your screen. Thank you. So we were told, XAUSD buy limit at, I don't know, 53.52, right? Whatever it is. Okay. So this is 53.52. If it's a buy, of course, we want the market to move up, right? Our trade is where that's how we're going to make profit. But when this is sent, our trade's going to be moving, or sorry, the market's going to be moving in the opposite direction, meaning we want to see the market come down to our price. Okay, once it hits our entry here, the trade will be activated and we then want it to buy upwards. Okay, so that's what I mean by opposite direction. If it's a limit order, it's going to be going the opposite direction. So a buy, market needs to come down, touch our entry, and then we want it to go up. Now, if it was a sell limit, it would just be the opposite, right? Let's say this is our entry price. Of course, a sell means we want the market to come down. But if it's a sell limit, we need it to come up first. We need it to come up to our entry, touch our entry, hopefully activate our trade, and then we want it to move down. Now, the reason why, actually, can someone tell me in the chat box, why might a trader set up a limit order and not just a market execution? Like, what's the significance of the price they have chosen? And there's a few different answers to this, so just go with your gut. But let's say, if someone put a buy limit at 53.52, why would a trader be specifically choosing that price? Nope. Okay, it could be based on market structure. It could be reaching a key level. Okay, good. So there we go. POI is what I was looking for because it could be every trader is maybe going to have different points of interest depending on the types of trades they're doing, okay, or the type of trader they are. So let's say, for example, Donnie, I don't know if he's still on the call, but Donnie teaches smart money concepts. So when he's looking for an entry, one of the first things he's looking for is areas of liquidity so he can kind of anticipate where the market might be coming to. Right? He has an indicator that looks for fair value gaps that helps give us an entry. Okay, so POI stands for point of interest. So it might be looking for areas of liquidity. It might be finding fair value gaps. If someone's a support or resistance trader, if it was a buy, that might be a level of support. If it was a sell, that might be a level of resistance. If you're a beginner and that's sounding a little bit too advanced, just take the notes, go through the beginner education, and it'll all start to make sense. Okay? But just know that these numbers aren't just plucked out of nowhere. Okay? It is based on that trader's strategy and a point of interest in the market that they have, identified. Now, the reason why I'm saying that is because let's say, for example, this was a level of support. Okay, we were going to take a buy here because this was a level of support. What the market often does is tests these points of interest. It's not just going to hit it exactly and boom, go straight into profit. It's probably going to test this level to make sure it's strong enough. So it might push down a little bit and come back up and then, push down and test it again and come back up and push down again before finally making its move. This area is what causes beginners traders usually to stress. Because if you're looking at your MetaTrader 5, that usually means, oh, I'm in profit. Ooh, I'm at a profit. Ooh, I'm in profit. Ooh, I'm at a profit. Right? Drop a 1 if seeing red on your MT5 stresses you out a bit. And don't lie. Yeah, if you're a beginner and you're seeing that red, you're like, oh my gosh, maybe this is going to be a losing trade. Just, chill. Set your MT5 down for a second because that's often what happens. It's just testing that level before it makes its move. Okay? So, buy limits, sell limits. Put an MS in the chat box if that makes sense. So for a buy limit, it's got to come down to your entry price. If it's a sell limit, we know it's got to come up to our entry price before it can activate. Okay, so limit orders. Let me know if that makes sense. Okay, makes sense so far. Good. Now, the good news is stop orders are dead easy. They're even easier than limit orders. Let me see. Can I drag this down? Oh yeah, I can. Perfect. Okay, stop orders are super easy because stop orders are already moving in the direction of your trade. Okay, so what does that mean? Let's say I was told to buy gold at, I don't know, 50, I'll just use the same price, 53.52, I think is what I said. Okay, so obviously, again, if it's a buy, that means, I'm going to do that in blue actually. Obviously, I want the market to come up. Let's say this is 53.52. That's my entry price. Market's already going to be going up, and I just want to catch the bus. I want it to hit my entry and just keep on going. Okay, so think of stop orders as a bus stop. Okay, the market's already moving in your direction. You just want to catch that bus as it passes you by and just keeps on going. Okay, same for a sell stop. Okay, oh, I wanted to change that to red. Doesn't really matter. Okay, if this was a sell stop, SS, sell stop, market's already going to be moving down. I just want it to tap my entry and just keep on moving down. Okay, easy peasy. That one should be easy. Just bus stop. I just want to keep going, whether it's a buy or whether it's a sell. Now, why you really want to know this is because when we get sent trades, if we're getting sent a signal and it tells us buy limit or sell limit, I don't think I've ever seen a stop order put into the signal chat since we've launched, but if it was there, okay, why this is important is because let's say it was a limit order. I'm going to go with limits because there's more limits. Okay, this first one here, if the limit order was 53.52, then when you set the pending order, let's say you see it, I don't know, 30 minutes after it was sent. You want to make sure price is still above 53.52 so that you're still okay to set up that pending order. So if it's somewhere up here at 53.60, then you're like, okay, cool. It's still got to come down another 80 pips so I can go ahead and I can set up that pending order. Okay, that's why it's important to know this. So when you're looking at price and you look at your MT5 chart, you can now be like, okay, cool, that trade is still valid. Okay, are there any questions on this before I move over to actually taking trades on MetaTrader 5? Actually, no, I'm going to use the risk calculator first because once I move to MT5, I'm going to do everything else on my phone for the rest of this session. Are there any questions about pending orders? Or are we good? So if I quiz on this, everybody's gonna, get 100%. Okay. Cool, cool, cool. Good so far. Amazing. Okay, so let me come back over to our screen here. Okay. So, sorry, I've just seen a no. Don't say that, Kathy. Gotta speak confidence. All right, cool. So what I want to show you guys real quick is actually on the PrimeVerse platform, which some of you may not even know about. So we actually have a built-in risk calculator. So if you scroll down here, you've got a lot size calculator right here down at the very bottom. If I were you, I would be using this thing. I mean, every single time a trade drops, pretty much, until you get used to, you'll eventually get used to seeing the stop loss and be like, okay, that's 50 pips, that's 60, that's 70. It will get to that point. But for now, you can use this calculator. So let's say, for example, I'm just going to look at why do we have to use that if we are already, because a lot size calculator is nothing about the signals, it's about your risk on your account. So my account size is going to be different to your account size, which is going to be different to, I don't know, Candace's account size, which is going to be different to Donnie's account size. A lot size calculator is for calculating your risk. Okay, so for example, let's say I have, $500. You can put exactly. Let's say I've got $526. You can round up. Let's say 550, right? Let's say I've got $550 in my trading account. Okay, and I'm willing to risk 2% per trade. Okay, you can put 1%, you can put 3%. It's your account, it's up to you. I wouldn't suggest, though, risking more than 3%, especially, if you're a new trader. As you get a little bit more advanced, I know there's some traders who risk 5%, but they do that consistently. So they get those consistent results. Again, with your risk, whatever you decide, stick with it. Okay, so if I'm going to risk 2% per trade, I'm going to risk 2% every time I take a trade. Okay, so 2% risk, then you put the stop loss. Okay, so let me just look at our most recent. We haven't had one yet today. I can only assume, obviously, everything that's happening in the Middle East, it's making the market pretty volatile. So let's say, okay, there was a gold trade on Friday and the stop loss was 60 pips. So you would just type in here 60 pips. Okay, some of the signals we get sent are 50, some of them are 70. So you just want to type in how many pips the stop loss is, and then down here, select what you're trading. Okay, so if we're trading gold, you would click gold and go ahead and click calculate. So this shows me my 2% risk on my $550 account is $11. So if this goes and hits my stop loss, I know I'm losing $11. It also shows me I can safely risk a 0.02. Okay, now what does this mean if we're taking 3 entries? Well, that shows me that if I'm going to split my risk across these 3 entries, I'm going to need to lower my lot size to 0.01 for each of these and know that I'm actually risking probably 3% instead of 2%. Okay? Does that make sense? So if you have about $500 in your account and you're going to look to take 3 entries per trade, do not go more than a 0.01. Oh, sorry, my son's watching Miss Rachel and something like really excited him. Okay, so this, guys, this lot size calculator should become your best friend. Okay, come on to it, test things out. Okay, if I have 550 and I want to risk 3%, let me calculate. Okay, cool. I know I can risk a 0.03, and that's 1650 that I'm going to lose on my account size. Okay, so is that based on the 0.01? I'm not sure what you mean, Kathy, but I think maybe you asked that before I put everything in. So hopefully that makes more sense now. But yes, sorry. That distracted me there for a second. So cool. Let me just go to the chat box. Okay, yeah, cool. I thought maybe that we'd gone through that. All right, awesome. So let's actually go through now and go through how to take these. Okay, let's go through how to take these. We've gone through market execution pending order. So let me just quickly join on my phone, guys. Oh, do you know what? Oh yeah, I'm host, so I can make it. Sorry, guys. Let me just join on my phone. I should have done this beforehand. So we can now actually go on to MetaTrader 5 and we're going to take an example trade. So if you have a demo account, feel free to, take this with me, but it's not going to be a real trade. So don't go and, take this because I'm just going to make up the numbers. Okay, so let me join on here first. One second. Doo, doo, doo.
Recording in progress.
Okay, so let me just make my phone co-host so I can share. All right, cool. So let's make up a signal first, and then I'm going to, let me just go to the gold chart and see where we're at right now. Okay, so we're gonna pretend we were sent, okay, buy limit, whoopsies, let me type this here. Buy limit, the pair, this is what our signals look like, XAU USD. Entry is 5,300. Let's do 5,300 to 5,302. Okay, because usually our trades will give, kind of a 20 pip zone. Okay, TP1, I'm probably not going to do all the TPs just for time's sake, but TP1 is usually 30 pips. So if it was the 5,300, that would be 5,303, TP2, 5,306. Okay, so on and so forth. Okay, I'm not going to go through all of it. Imagine there's up to a TP5, and then our stop loss is going to be 52.94. Okay, which would make from 5,300 a 60 pip. Actually, 60 pip stop loss. Okay, so let me share my screen here, and we are going to go over, and we are going to, let me share a screen. We're going to look at the chart. So drop a 1, guys, as soon as you can see my screen, please. Drop a 1 as soon as you can see my screen. I can't for some reason. Okay, Jackie, you can see it. Can you guys see it? Why can't I? That's weird. All right, as long as you guys can see it. Okay, so first thing you're going to do is you're going to come to your quotes page. Now, just a really quick tutorial on quotes page, because again, if you're new, you might not know. If you ever need to delete something, so usually when you first set up your MetaTrader 5, you're going to have a whole bunch of pairs that you are never going to trade, like, USD ZAR or USD TRY, like a whole bunch of stuff. So if you want to delete all of that and get rid of the noise, then you click the top left-hand corner where the dot and like the lines are, and then you click the pencil. Once you've clicked the pencil, this then allows you, if you tick it, and then you can see the trash can appears in red there at the top, and you can go ahead and you can delete those from your quotes page. Now, if you then want to add a pair, you'll click the search up at the top right, the little search logo, and then type in what you want to trade. Okay, so let's say it was, I don't know, Ethereum, because I know I don't have that added. Okay, I would start typing it in. You can see ETH USD is the top one there. I would click the bubble, and then I can close it. And there you go. ETH USD is now, you can see it at the very bottom of my quotes page. Okay, so just wanted to show that real quick. Now, XU USD was our trade. It was a buy limit at 5,300. So the first thing I want to do is I want to look at the chart. Okay. Now I want you guys to tell me either yes or no in the chat box. Is this trade still valid? Like, would I go ahead and set up the pending order right now if the entry price was 5,300? Based on what we just learned about limit orders, not stop orders because the limit order, But yes or no, could I still take this trade? Is this trade still valid? If I just received the signal, current price is 53.07. I don't know if things are lagging or nobody's answering, but there's over 30 people. So put yes or no. Yes, I can still take this, or no, you don't think it's valid anymore. Okay, I've got 2 yeses so far. Anyone else? Okay. Okay. So, yes, I can still take this because if my entry price was 5,300, okay, which is right there, 5,300, for example, you can see that physically on the chart. Okay, for a limit order, I need price to come down to my 5,300. So basically, anything above 5,300, and I can go ahead and take that trade. Okay, so I've checked it's still valid. Now I want to take it. I can click here, I can click trade, and then this is where I would set it up. So at the top, market execution, I would click that, and you can now see the different options I have for my pending orders. It was a buy limit. I'm obviously just copying what the signal tells me to do. So I will click buy limit. I will put in my price, which was 5,300. I will put in my stop loss, which I think I said was 52.94, I think I said. I'm just making this up. So don't copy this, guys. I'm just plucking this trade out of thin air. Okay, and then I would put TP1 first. If I'm going to take multiple entries, I always start with TP1. Then you can do TP2, whatever it else you decide to do with your trading plan. And then I would go ahead and I would place the order. Okay. So I'm not actually going to place that order because it's not an actual trade. Okay, so I would go ahead and I would place the order. Now, let's say this was a market execution. Okay, let's say my entry was actually, I don't know, 53.05 to 53.03. Okay, if I look at price right now, it's at 53.04 something, meaning it's in the entry zone. So what I can do now, if I want to get in quickly, I can go to the top right-hand corner where those, see the like blue and red square? I can click that. Now you can see at the top, a thing has popped up where it says buy on the right, sell on the left. Okay, so if I wanted to get in quickly, I could literally just go ahead and quickly click the buy button and I'm in the trade. This part in the middle is where you can then change your lot size. So based on, you've gone to the risk calculator, you know how much you're going to risk based on your trading plan. Okay, so let's say, I don't know, it was 0.03. I could then go ahead and click buy. Okay, now what I'm actually going to do is I meant to, hold on. I'm going to actually log into a demo account so I can actually take a couple trades and show you guys. 1 second. I'm going to stop sharing just for a second. I'm going to log into a demo account and we're actually just going to take a couple trades. So give me 2 seconds, guys. New accounts, EU Prime, demo. Let me just type this in quick. And the password, oh, sugar. Sorry, guys, just typing in the awkward password. That's like a mixture of capitals and all that kind of stuff. N-E. Okay, cool. Okay, let me reshare. Not now. Why is that not? Okay, it's just, hold on. It's just logging in, guys, and then I can share this again. So let me come back to this, share screen, and hopefully it will be logged in by the time you guys can see it. Okay. Not yet. Come on. Let me wait for this. There we go. Okay, cool. Okay, so let's go to golds. First, we need to add gold. Oh, there we go. It's down here. We're going to click trade. Okay, so let's pretend our trade is valid. Okay, cool. We're in the entry zone. Okay, we were told to, I don't know, buy. If this is your first time doing this, actually, I'm glad I'm recording this. You just need to accept the terms about one-click trading. accept. Okay, and let me go ahead buy. I'm also going to do a sell though to see which one goes in profit so I can show you how to move stop loss to break even. Okay, but let's say I've gotten into the trade quickly. Okay, I'm in the trade and I now want to put in my stop loss and my take profit. Okay, so I would come over here. If you ever need to modify your trade, you would just click on it and click modify position. This is the one way to do it. I'm going to show you the other way. Okay, so let's say my take profit is, this was the sell, so I'm going to put 53.05 and there we go. So you can see now it's popped up. You can see the stop loss at the top. You can see the take profit at the bottom because that was a sell entry that I had modified. So there we go. Whoopsies. Why are you doing that? Okay. So I'm in the trade. Now let's say, for example, this trade is in profit. Maybe it's hit TP1. I'm happy. I've closed the trade. I'm in profit. But I now want to move my stop loss to entry on any remaining trades. So what I do is I click on it. See now at the top where it says stop loss. And if it hits my stop loss, I can see I'm going to lose $15. But if it comes and hits my TP, I can see I'm going to make like basically $15. If I want to move my stop loss to break even, all I now need to do is just drag this down. I always put it a little bit like below, or if it's a sell, so that way I'm closing a little bit of profit and not negative. And then see down at the bottom, there's a blue arrow in the bottom right corner. Okay, click the blue arrow. Oh, okay, I can't click modify because it just, where is it? Okay, now I can. Oh no, did it hit my take profit? Okay, I can't do it. Oh yeah, I hit take profit. That's why. Okay. But you saw how to do it. Okay, let me do it with the buy. Let me do it with the buy so you guys can actually see. So let me go back here. Let me modify my trade. I'll put in my stop loss. Let's say my stop loss is 5,300 and my take profit is 53, whatever. Let me make that up. Okay. So come back over. Okay, now you can see my stop loss. You can see my take profit. Everybody can see that. So if I'm wanting to move my stop loss to my entry price, now obviously right now it's in drawdown, so I wouldn't. This is obviously if it goes in profit. It won't let me click the blue arrow, but I would click the blue arrow and I would click modify. You guys saw it there. See where it says modify? I would go ahead and click modify and that would have moved my stop loss to break even. Okay, so that's the easiest way to move your stop loss to break even. You can also do it the manual way and you can click modify position and you could literally type in your entry price. Okay, I entered at 50, but that way takes longer, right? When it comes to gold, you literally just click, you can drag it up and then modify. Okay? Any questions about that? Okay, because we've just, even though I've kind of gone through that pretty quickly, but you can now see how to move your stop loss to break even, which is just drag it and click modify. Okay, if you need to add your stop loss and take profit because you just wanted to quickly enter, you come here, you click modify, you type in your stop loss and take profit. Okay, to place your trade, you would come here, you would click on the pair. Okay, you can go ahead and click trade. If you're doing a pending order, you would change it here. You can also do market execution from here as well and just quickly click buy and then boom, I'm in the trade. Okay, you see it pop up there. Okay, but I think that's pretty much everything with MetaTrader 5. So opening the trades, market execution versus pending order, moving our stop loss, editing our stop loss. Any questions about MetaTrader 5 whatsoever before we finish up this part? And then I'm just going to quickly go through one last thing and then we're pretty much done for this session. Any questions? Because if not, I'm going to stop sharing this and I'm going to come back over. Okay, doesn't look like there's any. Amazing. So the last thing I wanted to go through today is now that you let me come back over to my slides here. Um, you've got a bit of a plan here. And it's, again, I say a bit of a plan because it's going to be up to you how many entries you want to take. But what you want to do now is decide on how you are going to track these trades and how you are going to track your results. Okay, so you're going to do this in a couple different ways. You want to create yourself a trading plan. Now, one way that you can have a trading plan is through a compound interest plan. Okay, so this is if you have a set percentage target per day, and once you hit that target, you stop trading. Okay, so this is just a site, I don't know, I've always used in my 5 years of trading. I find it super easy to use. You guys can see it on the screen there. It's compounddaily.org/calculator. So what you would do is you would come down, you would put, it's got start date, your account currency, so you can change it to euro, pound, whatever your account currency is in, put your initial amount. Okay, I'm gonna stick with $500 just because I think that's kind of like, quite an average amount people start with. And then how much you want to grow your account per day. Okay, I would say 2 to 3% is a pretty achievable goal. Okay, for something to do every day for the next, however long year, let's say. Okay, so let's say it's 2%. My compounding frequency is daily. You can see here. Now I'm going to put how long I'm going to do this. Let's get rid of this. Let's do this for 6 months. Just so you know, let's do 3 months. I think a lot of people, you see the short term. Let's do 3 months. I'm not going to include weekends because for the most part, we don't trade weekends unless you catch yourself a couple Bitcoin trades. My daily reinvest is 100%. What that means is just if I don't withdraw. Obviously, you definitely want to withdraw, but just so you can see the power of compounding. And additional contribution, none. I'm not going to add in any more money. I'm just keeping in my 500. I click calculate. Now, when I scroll down here, I can see that my $500 can grow into almost 2,000 at just 2% per day for 3 months. Now, the reason why I show this too is because quite a lot of people will actually be dissatisfied with that amount of growth because day one, your target is just $10, right? 2% is $10, or sorry, 2% of 500. Day two, $10.20. To a lot of people, $10 is not a lot of money. Okay. But if I scroll down to my end of my 3 months, I'm no longer just making $10 a day. I'm now up to $36 a day. But what if I continued? And this is where I hope, especially when it comes to psychology, some of you maybe get a little mindset shift. Let's say we didn't do this for 3 months. We actually did this for a whole year. 2% per day. We just repeat the same boring action every day. Let me calculate. Instead of $500, I could grow this to $87,000 in a year. I didn't add any more money. I didn't change anything. I just stayed consistent to 2% per day. So this $10 that you're not satisfied with on day one, okay, even on day 39, that $17 that you're like, oh, it's only $17, but this continues to compound and continues to compound. By the end of the year, I could be potentially starting to make $1,700 a day, $1,600 a day. I'm not even gonna say yes in the chat box, but I'm gonna take a good guess that if I were to tell you that you just needed to make 2% a day for the next year, Monday to Friday, and your 500 is going to turn into 86,000, you'll be satisfied with that $10 because you know what that $10 can grow into. Okay? And I think I said this on last week's call. Even if you didn't do this every single day. Let's say there was days you took a loss, because we are going to take losses. Rather than 86,000, even if you only did half and it was 43,000, if all you were doing was copying some numbers from our signal providers and just staying disciplined to your trading plan, staying disciplined to this compounding plan, meaning you make your 2% and you stop trading. If I were to hand you over $40,000 at the end of this year, I pretty much guarantee every single one of you would stick to your trading plan. You would stay disciplined. Now, the crazy thing is $10, even if at a 0.01, you only need one gold trade to hit 100 pips and you've made your $10. So there's no need to over leverage. There's no need to over trade. Okay. Now, another reason why I like this site is because you can print this off. You can download this as a PDF. You can download it as a spreadsheet. So this now becomes your trading plan. So if you send this to yourself as a spreadsheet, right, you could delete, let's say here, the total principal, you could delete these. And every day when you're done trading for the day, what's your new capital? Fill that in. How much profit did you make? You could put your percentage over here. Maybe day one, you actually make 3%. But day two, you make, I don't know, zero, half a percent. You had a bad day. It allows you to then track your results. Okay, and hopefully keep you accountable. Now, this is just one way to do a trading plan. So this is a compounding plan. You don't have to do it like this. I know a lot of people have a monetary trading plan. When I say that, I mean they have like a dollar amount. So let's say you have $500 and your goal for the first month is $20 a day. You make your $20, you stop. You do that Monday to Friday for the first month. And then month two, you can decide to change that up. And instead of $20, maybe month two is $40, right? Whatever the case may be, just make it reasonable. Don't have $500 in your account and think you're going to make $100 every day. Can you do that? Yes. But are you probably going to be over trading and over leveraging? Probably. So it doesn't create good habits. If you create good habits now with like a simple trading plan like this, you get disciplined enough to stop trading when you hit your percentage, then you will be successful in trading long term. If you don't have a plan, if you're not disciplined, I guarantee you, you won't be successful long term. Okay, so guys, we're going to stop there. We have been on here now for that full hour. Are there any questions about anything I covered today that you guys want clarified? Because next week we are obviously then moving on, okay, to a different topic. Okay, we've got a different topic coming next week. So are there any questions before we move on? Or before we end? Sorry, before we end. Okay. Awesome. All right, guys. Well, we're going to end there. I hope you all have a fantastic rest of your week. I will be doing this session, tomorrow night at 8 p.m., but it's going to be the same one that you've just done. But, if you have team members or other people in your team who you feel like would benefit from this session, just let them know. Tomorrow night, 8 p.m. Eastern Standard, I will be doing this session again. All right. Somebody messaged me privately. I'm not going to read it out loud. I'm just going to read it really quickly. Okay, so the question is, I won't read out names, but the question was about having a smaller account and tips on growing a smaller account, of an account like of less than $100. Number one, I would say if you can afford to top up the account, top up the account. Because the reality is, in the trading world where there's like $7 trillion a day going through the markets, $100, I personally, I don't accept many students if with less than $100, just because every time you take a trade, you're risking way too much of your account. If it was a gold trade, for example, and the stop loss was 60 pips, even if you took a 0.01, you're going to lose $6, which is 6% of a $100 account. For me personally, that's risking too much of an account in order for your trading to be sustainable. So that's my first suggestion. If you can afford to put a bit more in, I would, simply because you're risking way too much per trade. If you cannot afford to put more in, then get good at holding trades, right? I showed you at the very beginning of this call, one of my team members, he only took a 0.01, but he held the trade for an entire day and it made 240 something dollars because gold did 2,000 pips within that day, right? So if you have low capital, don't like panic and be like, oh, I'm a couple dollars in profit. Let me close. Hold it, right? Hold those trades as long as possible and move your stop loss up behind you. Okay. Because to be honest, that's going to be one of the only ways that you're going to get yourself to a position where your account is a decent size and you can start managing your risk properly. But the reality is, if you have even less than like, $250 in your account, you're over risking every trade pretty much. Okay. So that would be my tip for the person who asked that question. But yeah, other than that, guys, I'm going to jump off. I hope you have a fantastic day and I will see you all hopefully next week. Take care. Bye.